Hello, everyone, and welcome back to the channel. This is Fair Value Finder, and today we're taking a look at VICI Properties, ticker VICI. They had earnings the other day, so we're going to dive into those and see if they're on track for what they're expected of this year and how that affects their value, because they are currently on the buy list, and we want to see if we want to double down or potentially move them to just a hold. So we see here their year-to-date values and their expected values for the year. And considering that we're looking at the quarter two numbers, we'd want this to be around the 50% mark. And if they are right around that mark, then we'd be looking at a buy around 41, just shy of 41, and a sell around 53, with the current share price in the middle $31 range. So they are currently sitting in that perfect margin of safety buy range. So we're looking at spot on with the revenue coming in at 1.775, looking for 3.56 on the year. The gross profits are a little bit higher, so they are coming in with a better margin off those numbers. The total expenses are significantly lower, coming in only 23% of what we would be looking at for the entire year based on how they have historically performed. So that tells me that they're probably not doing a whole lot of acquisitions or building new properties. And their net income is also ahead, which is just a good sign. So the margins are clearly better than they have been previously. Earnings per share, they're exactly halfway there. We're looking at $2.42 on the year. Basic average shares, so they are a REIT that is constantly growing their share count to buy properties and hold their dividends stable. So this is one of the exceptions where I would say a growing share count is probably a good thing. Their shareholders' equity is growing. There is a ways to go still, but it is up from what it was last year, over 10%. We'd like to see it up to 30.7, currently sitting at 24.1. And then we have assets. The assets have grown nicely. There's still a ways to go. They're currently at 42.25. We want to see them get up to 53.17, and the liabilities are up. No surprise here for a real estate investment trust, and they have a ways to go to hit the goal as well. They're a bit further on the way than the assets are, but they're currently sitting at 18.17, and we'd be looking at them to hit 21.72 by the end of the year. So their debt to equity, they're currently at 0.75, which is great. Less than 1 for a REIT is really good. And then the dividend, so currently with the current share price and their expected dividend, they're yielding just about 5%, which is a really good yield. And they're pretty good about growing it as well, growing it at 8 to 10% over the time period that we're looking at here. So they seem to be spot on. I like what I'm seeing from all of those numbers, and they would definitely hold in the undervalued range. So I continue that buy rating and would double down. But we can take a look at the actual earnings report and see what they have to say about it. So here we're looking at the earnings. They are talking about increased revenue growth, 35.5% year over year, which is incredible. Net income had some nice growth, and the weighted average shares are up 12.4%. But the comments are what are important here. So VICI's strong second quarter financial performance, exemplified by approximately 36% revenue growth and nearly 12% growth in AFFO per share year over year, reflects the impact of our consistent commitment to creative acquisitions, and strategic financings. We also ended the quarter with ample liquidity, including $739 million in cash and cash equivalents, $868 million of estimated equity proceeds available upon settlement of forward sales agreements, and $2.4 billion of availability under the revolving credit facility. The quarter's results and current liquidity enable VICI to uh, continue in our pursuit of attractive domestic and international growth opportunities across the experimental landscape. In the second quarter, we continue to expand our international presence through the announced four casino properties in Alberta, Canada, with our existing tenant and partner, Century Casinos. Subsequent to quarter end, we also closed the previously announced acquisition of Century by Rocky Gap, providing the value of our enduring partnership with growth-minded operators. Finally, we're excited to announce that subsequent to quarter end, we broadened and deepened our relationship with Canyon Ranch through the establishment of our VICI Canyon Ranch Growth Partnership, a multifaceted investment relationship. This initiative includes VICI investing preferred equity into the Canyon Ranch operating platform, an investment that will contribute to enabling the Canyon Ranch operating platform to resource the growth of the Canyon Ranch Resort Network and other brand extensions. Through this investment, we have also further enhanced our embedded growth pipeline with call rights on Canyon Ranch Tucson and Canyon Ranch Lenox, as well as solidify the partnership as the capital partner for Canyon Ranch as they look to expand their wellness resort ecosystems. And then they go through specific numbers and talk about some of the acquisitions and portfolio activity. So this is another part that is going to be important for us to take a look at. So those casinos that they had talked about, here's the Rocky Gap. Looks like it was all basically covered in the above. Yeah, Canyon Ranch. So they intend to provide $150 million of mortgage financing to a subsidiary of Canyon Ranch, secured by Canyon Ranch Tucson and Canyon Ranch Lenox. Proceeds of the mortgage financing would be used to refinance Canyon Ranch's existing debt. So everything I'm seeing here is good news, and I definitely feel like it is a double down stock because it has not moved much, if at all, since we had last taken a look at it, and it pays out a nice dividend. So even if it's not moving, you're getting rewarded as a shareholder. 5% yield is pretty good. I mean, they're growing it every single year, so that should, considering that you're holding for the long term, pay you back for your investment well before retirement. But I want to thank you guys for watching. Please like if you enjoy the video. Comment if there's another stock that had earnings that we should take a look at. I know I've got a list that I need to go through still. And subscribe so you can stay up to date on everything. And I will catch you next time.